Thanks for tuning in to today's podcast. Please remember that all of the information in this podcast episode is limited to general information only. That means the information is not specific to you, your needs, goals, or objectives, so you should seek the advice of a licensed and trusted financial professional before acting on the information. And before you acquire or apply for a financial product, please read the PDS or product disclosure statement, which should be available on the issuer's website. Lastly, please keep in mind that past performance is not indicative of future performance. Welcome back to this weekly episode where I'm joined by Anirban of 7 Investing. This week, we're talking all different types of stuff. We're talking Netflix's earnings miss. We're talking about Altium's botched takeover. We're talking about a few companies to put on your watch list, including an ASX technology company and a global technology company. And we also talk about innovation, the impacts of the Delta variant of COVID, what it means for hospitalizations, Freedom Day, and the world resuming regular programming. Are there any opportunities that will arise? I hope you enjoyed this episode of the Australian Investors Podcast. Be sure to reach out to Anirban or myself via Twitter and keep the conversation going. Thanks for listening. Anirban, thanks for joining me, mate. It's always a pleasure.
Mate, pleasure is all mine. The only thing I was going to say to you is, I'm not going to say this I'm not going to make fun of this, but I'm going to say that you and I both are in lockdown. Mm-hmm. So how better to spend time, but to actually do a podcast?
Oh, why not? You can do it anywhere, anytime. And we'll try and keep it on time this week. We've come in with... So the way we generally prepare is we have a Google document and then we have the podcast when we're doing it remote. And this week we've pasted in 5 URLs and that's all we're going with. Today we are talking about what we've been working on. We're going to talk about Altiums. I'm going to say it's like a botched takeover offer from Autodesk. Autodesk have terminated it. Netflix misses earnings. Bezo went to space, which we touched on Sir Richard Branson and Virgin Galactic last week. And then we're talking about the Delta variant and market turbulence. And then we might just close out with some stock ideas for your watch list. So top of the show, we want to say you can find us on Twitter. I'm at Owen Rask. Anirban is at 7A Mahanti. So you'll find all of that in the show notes. Jump onto Twitter. We've been talking to everyone. Last week we were talking about Treasury Wines. Heaps of stuff to talk about on Twitter, right?
Absolutely. And again, echo everything that Owen said. Just come to Twitter, talk to us, ask us questions, give us ideas, and we will bring them to the show. We love your ideas. Yeah, give us ideas. Yeah, we would steal your ideas and bring them here, but we will acknowledge that we took your ideas, and we'll, if you're willing, we'll put your name out.
Yeah. So we actually had an email come in from Stephen who said, at his podcast idea, we should have a Nightmare on Wall Street. So an episode where we kind of have a bit of fun with the stock market and what would happen if Wall Street closed down. He even said maybe we could even talk about the conspiracies that happen in stock markets around bots, market manipulation, leaky ships, the end of fiat currency, you name it. So much to talk about. Those are the types of quirky ideas we want to hear, as well as companies that you want us to take a look at and chat about. I think the hardest thing for us is just narrowing down what you want to hear, because there are so many things that happen in markets, so much noise. We want to focus on the key points for your week if you're an investor. So I thought we'd just kick off what we've been working on lately. Maybe I'll throw it over to you first, mate. Last week you said you were working on emerging markets and payments for 7 Investing, doing a report. Are you still working on that, or what have you been doing the last 7 days?
No, so that report is out. Actually, really like that report because there's some very interesting things there. I'll just without going into too much detail, the payment infrastructure in emerging markets is completely different from the payments infrastructure here, and when I say here, I mean like sort of the developed market payment infrastructures, whether it's Australia or Europe, Western Europe, and North America, but that really creates opportunities, and that write-up was really all about that. But now I'm focused on sort of finding working on our recommendations working on my recommendation for August. That's happening.
How does that work? Do you do it? Do you come up with the idea yourself, and do you do the full research yourself, then present it to the team, or do you work together collaboratively? I know you do one idea each a month, but how does that work?
Yeah. So we each independently pitch an idea to the team, and we have a stock presentation which we actually make available to our members, and it sort of gives you an idea of the thinking behind the idea we have pitched. And one of the things that happens during this call is that, we get asked questions by colleagues and other advisors, and based on those ideas, I guess it's quite possible maybe that the idea you pitched is not good, or that there's something that you forgot about, or something that you should look into. So that sort of helps with refining the thinking behind sort of the idea. But like last month, I did, without going again into too much detail, last month I had I thought it was a really interesting idea, but there was an very interesting question that was asked, which made me do some thinking. There was an aspect that I hadn't really thought about, at least in that particular fashion, and that made me do some comp work, basically compare a company today with a prior companies going back in time, and sort of thinking about the trajectory and how how sort of growth has happened, and what has how did those companies mature over time. And I think that's something very interesting, because it sort of gives you perspective, right? And again, those sort of things, and then I one of the things I like about this is that it gives you an opportunity to write something. So, you do some research, you do your modeling, or whatever work you're doing on spreadsheet, and then you can write about it and sort of explain what you came out with. So, anyways, that was interesting stuff. So that's sort of I really like the stock pitch part of what we do, because that sort of makes ideas interesting, and sort of the research, it sort of opens up the research to a large extent.
And it gives you a chance to get feedback, right, and fill in the blanks.
Absolutely.
Yeah, cool. I like it. We're trying to do something similar with the analyst team now, where it's a bit more top down with us. So I think it's more so me directing some of the guys that are newer analysts to the team, just directing them, and then checking in every week as a group. I think one of the things where I see a lot of funds fall down is that it becomes too much of decision by committee. And oftentimes when you have a committee making decisions, you often end up losing your edges, because the edge that you might have as an investor can kind of be rounded off by other investors who have too much of an influence over your decision making. And I'm not saying that it's a bad thing to seek feedback. I think it's really, really positive. But I think for investors' sake too, whether they're, say, joining Seven Investing or they're joining Rask, it's also good to know who's making the decision. I feel like that's, for transparency, it's also really good too. But yeah, so that's what basically we've been doing. We've been doing those internally and trying to figure out how we can scale our research. So what it specifically means is, typically at Rask, because we've had such a small team for a long time, like we've been a startup, it's been me, Catherine, Kevin, but now we're expanding the team. It's how do we go from being super high conviction and using a lot of tools to narrow down that funnel, to then broadening the product suite, like we've got Rockets and now Invest Servers, while also maintaining that conviction. It's a tough thing, but it's something that I've got to work on. Basically, specifically in the last week, we've actually been working on releasing some of our quarterly reports and Rocket reports, and one of those I'm going to talk about at the end of the show. So keep listening and you'll find out one of the companies that we passed on and why we passed on it. Maybe, mate, the first key point of the show is Autodesk terminating with Altium. We've talked about this before. We've talked about the takeover offer. There's takeover offers left, right, and center on the ASX right now. You can't turn a page in the AFR, even if it's a digital page, without seeing something about a takeover offer. What happened here, do you reckon?
Well, the speculation is that this was not there in the release that Autodesk provided. So Autodesk basically, I think, went back to Altium with maybe $1 or $2 more than what they had originally offered, and Altium said no, and Autodesk said, "Okay, thank you, good luck, we wish you all the best," and basically walked over, left. I think this is going to be a test of the board and management, right? Because if now the next several years don't pan out as they might imagine is going to pan out, then investors are going to be really, really grumpy that you got this offer at a pretty substantial a premium to the then trading price, which you just let be. So again, we're going to know this in the fullness of time, but again, looks like they were not happy with the price. I was not really sure. We discussed this last time. So, and you and I both sort of agreed that the price sort of was right. And, any more than this sounds like paying way too much. But I guess Altium's board thinks otherwise. And
yeah, what is a little bit bizarre about this? And we've said that based on the valuation and based on management's recent execution, the risks in China, just currencies, everything, you name it, it doesn't look like they're going to meet their own forecasts. So, and they need to meet those forecasts to get to a base valuation, which is, to be honest, probably still below the current price. So this is then what made this bizarre, I found, was that Altium then came out when there was speculation of a $40 bid, which was up from the $38.50. This is a quote from Chairman Samuel Weiss, who says, in response to media speculation today, Altium Ltd advises that it has not received any further offer from Autodesk. All details relating to the Autodesk offer have been disclosed by the company in its ASX announcement released to the market on 7 June 2021. But then, now this is fast forward to July 20. There's a quote from the Autodesk website from CEO Andrew Anagnost, I think is how you pronounce it. It says, Autodesk has a long track record of disciplined strategic acquisitions. The quote goes on to say, while we did verbally improve our initial proposal, we were unable to agree on the basis to advance discussions. We respect the leadership team at Altium and wish them the best with their business. End quote. So I feel like there was another offer, even if it was a verbal offer. So maybe AFR reporting $40 an offer did actually happen.
Well, there's an interesting thing here, right? So, if given what Altium has said, as you quoted based on the quote, and given what Autodesk has said, there's a question of continuous disclosure. And I'm not a big fan of the continuous disclosure personally, because I think it creates some loopy effects, after effects. But this one, is an offer discussion. I would expect this is definitely a disclosure item, at least in my mind. But maybe they thought that since it's not a written offer, it doesn't need disclosure and has been terminated. So anyway, it's very interesting, I think.
Yeah.
So we'll know.
Yeah, it's actually one that I'm going to do a bit of a deep dive in tomorrow. I'm actually going to do the valuation for our members live and show you how it kind of shakes out. We're recording this on Wednesday, July 21, by the way. So it's a fascinating thing. So the rumor was the offer was at $40. I'm looking at this now, and it looks like Altium shares are back down around $33. So
still higher than 27. Or whereabouts they were traveling. So people still think that there's going to some miraculous alternative offer show up, right?
Yeah, which is interesting. So, well, I guess the takeaway here is that if you still own Altium, you still own Altium. So it's it's still a business that's profitable. If management can deliver, then maybe it goes on to justify itself. They're very confident in their ability to execute. So if you back them, maybe it works out from here. Next topic for today's conversation, next URL in the document is Netflix earnings. This is interesting because this is right in your wheelhouse, mate. I'll just read some headline numbers here that I got from CNBC. Earnings per share, $2.97 versus $3.16 expected. So that's below the expectations. Revenue of $7.34 billion versus the $7.32 expected. So slight beat there. Global paid net subscriber additions, 1.54 million versus 1.19 expected. So better than expected. Basically, earnings didn't hit. The other two did hit. Everyone knows what Netflix does. It's obviously a streaming service, but they have flagged more of a move into gaming. Right in your wheelhouse, mate. What do you expect? I know you don't set expectations necessarily for every quarter, but what did you make of this, generally speaking?
Yeah, so I guess there's a teaching moment here for us to help investors, or at least those who are beginner investors or early stage investors. I love these headlines when they say that missed expectations, right? So basically, a bunch of analysts came together, and there is a consensus. That's basically the average or the median earnings per share estimate of, let's say, 30 people, and it's a win for the company if it beats that median or average, and it's a miss for the company if it actually doesn't make that number. Now, I would be okay if you called it a miss if the company gave a guidance and then the company missed the guidance. But if the company didn't give the guidance and it was a bunch of people, other people who probably don't know the business as well, then I don't know what it means. I think those are very beautiful headlines, which we should ignore. I think the thing to note here is, they're still they're doing $7 billion of revenue. It's profitable, at least has earnings per shares that it can report. And it's 200 million plus subscribers it's got already. And I think the main point, you already hit the main point. The main point is that they're going to get into gaming, right? So if you think about the Netflix journey, the long-term journey started with mailing DVDs with only an online interface for selecting those DVDs. Then it started with streaming in a really small way, small catalog, expanded that catalog over time by doing deals with others, then started making its own content, right? And that even when they made its own content, they made the content with others and they had licensing arrangements and so on and so forth, even for those things. And eventually, they basically took broader global license, and now they're going into gaming and they're going to exploit their IP or the intellectual property in terms of all the content that they have on their platform. So this is maybe the fourth incarnation of pivot of a form or the other of the company, right? And I think long term, what's interesting is that this is being led by a person who came from Facebook, who was leading their virtual reality and augmented reality division. And it's interesting because I think longer term, I've always thought that Netflix is going to go in a big way into augmented reality, virtual reality, and you'd have these content streaming experience that would be in augmented reality form or a virtual reality format. And gaming probably is a great place to start this. So I think this is again showing company that's innovative over time, right? And this is the main thing. The main journey is that innovative companies keep innovating, and as long as they're innovating, they could continue to be good bets. And I'm not saying that you should go out and buy Facebook shares, Netflix shares, but yeah.
Yeah, it's so Reed Hastings, founder of Netflix. What I love is you can still access the original Netflix culture deck online, so you can go and you can see they've got this huge slide deck about what defines their culture, and some of the things are like high performance, honesty always was one that they got a bit of pushback on, like honesty always, because in a room of high performance people, adding mediocrity to that actually brings down the average. And so they're always talking about, even if it's brutal honesty, it's honesty. And if there's plenty of books about this too. So I would encourage you, if you're interested in Netflix and its innovation and its ability to attract and retain talent, have a look at that culture deck because it's fascinating. And we actually studied it on a retreat for Rask that we had earlier this year. But just zooming out a bit and coming back to the actual topic at hand, which is basically this transition away from a focus on like net ads for for subs. Really, it's mainly now moving across to, okay, how can we take what we're already doing and make it even better? And we see this with Apple Arcade, right? Like Apple Arcade has subscriptions and whatever, and you can access 100 games for free and all that stuff. And then you've got Facebook with Oculus and its push. You can now go to facebook.com and alongside your social media chats be playing one of the games in there. And so Netflix isn't the only one. And I think, if we go back a few years, we could see that the way this was going was that, imagine your movie, but you pick the ending, or something like that, where you can get some more interaction with the content. And I thought it was really interesting. There's a statement in here from Reed Hastings. It basically says we're not going to rely on consumer goods or other features like that. What we're going to rely on is basically our own intellectual property as well. So we're going to take the expertise we have, take the great products and storylines that we have, and how do we make that better? And I think that's fascinating. I don't really have a view on who wins it, but I'm quite happy owning Apple. I don't think it'll be a winner takes all. I think there's going to be many different places to get this. But having Netflix on your TV, on your phone, on your iPad, it definitely puts it in a seat. I don't know if you've seen it, the Black Widow movie, the Scarlett Johansson one. I'm not sure if you're into Marvel.
I haven't seen it actually.
Yeah, so you can. I paid full freight for this, by the way, so I don't know if I'm a sucker, but $36 you can pay to stream it, and basically this is through Disney. So this is Marvel's Disney, but it's the same concept. You can actually get advanced access, so go around the cinema. And because we're in lockdown, I didn't think we'd be able to get to the cinema anyway. But I'm really interested to see where that goes too. So this is not the first instance, but one of those instances where these big entertainment companies are cutting straight through the distribution of of the road shows and all that type of stuff, and going straight to consumers with new content that way that they pay extra for. I just think there's a lot of levers in an attention economy that these businesses have that people haven't really explored yet. I'm not sure if it's the gaming companies like Activision, Ubisoft, any of those. I'm not sure if it's those that win, but it's fascinating. Anyway, I kind of geek out of this stuff. Sorry, mate.
No, I think I love that, and it, I'll probably agree with you. It's probably not winners takes all. It's probably a market. It's so big, right? Gaming is a huge market, like massive. It's such a massive market. There are multiple players, and there's a lot of regional turfs as well in gaming, right? So what works in Japan does not probably work elsewhere. What works in China does not work elsewhere, and things like that. So, but yeah, love this stuff, and it's great. I just think that culture deck is really is interesting. I think that it sort of speaks to Netflix's very innovative style of going about doing business and building a company. So
yeah, because it seemed, and this is the thing, Netflix seems so simple. If you look at Netflix, you're like, why didn't we have this 20 years ago? I mean, other than say the internet, like it seems so simple. Like, yeah, just scroll through, pick a movie, watch a movie, makes sense, right? But that's actually, there's so much engineering and pioneering that went into that to bring that, I guess, intuitive product to us today. If they can do the same thing with gaming, we know that there's a huge bell curve that's moving from left to right through the age demo that love games. Like, I'm a gamer, I love gaming, and the ability to pick my own ending with some goggles on would be super cool. So really interesting. Speaking of nerding out over things from one to another, last week we spoke about Virgin Galactic, Richard Branson taking a space flight. Blue Origin also can now count itself as going to space, with Bezos riding in the New Shepard. Do you want to tell us about this, mate? Because I didn't actually watch it live.
No, I didn't watch it live either. Branson basically, I guess, one-upped here. But what was interesting is you talked about this last time. Actually, I remember this. Yeah, the Kármán line, right? Which is what, 85 kilometers or something like that?
Yeah.
Or
yep.
Is it 85 kilometers?
It's about that. So this one actually, about 80 k's.
Yeah, 80 k's. So this one was above that, right? And they spent. The total journey was about 10 minutes. So they must have been I guess weightless for a few minutes max. But, they could have seen, through the glass windows, they might have seen, beautiful scenery of the earth. So, I mean, I think this is showing that this tech is getting there, and, good demonstration. They had, they've selected people that there was an 18-year-old, there was an 81-year-old, and, Bezos himself, and I think Bezos' brother, right? Were the people who went in this. So what I think is interesting to me is what comes next, right? That's really, where is, Virgin Galactic looking? How's it going to monetize? So if you think of Virgin Galactic, the current plane can only fit I think 8 people, right? Can you have a bigger plane that can fit 16 or 24 or whatever number of people? Then maybe does that change the economics of doing this? Does it make it, does it increase the the addressable market, right? There's only be so many people who are going to be willing to pay, several $1 million to go to space for like a few minutes, right? And it's a joyride for very, very rich people. So I think that's the next steps are really interesting, but I think that this is technology demonstrators that have demonstrated that this is possible, and I think it's really cool. And again, the race I think is open in terms of what next. Really, it's the what next is what I'm really, really interested in seeing. Is what are we going to be doing mining in the space, or are we going to be doing regular journey to the space station, or is the space station going to be sort of like a transit point to go somewhere, right? Are those things going to become more and more common? When I say more and more common, but is it something that's beyond few billionaires? Does it expand to others, and how? And what are the other sort of lateral benefits? What inventions do these things bring about? So those are things that I'm interested in. But I think really cool that Bezos also went. And there were some jokes going around on the internet, which is I love. The Twitter can be fun. So while Bezos was on Earth momentarily, was in space momentarily, Elon Musk was the richest person on Earth because Bezos was in space. so you gotta love these sort of lines that go around on Twitter. So so come on Twitter and have some fun.
Yeah, I actually I remember when I was on Seven Investing the other day. I think Simon interviewed an astronaut, a NASA astronaut, a while ago. I think it's about 2 years back, and I found that it's only a 15-minute chat. Female, I can't remember her name, but really impressive. Because if you think about innovation, like you said, these guys are flying literally rockets into space that are landing, and people are coming back alive. Like, this is incredible stuff. And to think about that and the implications for that for investors, for society, incredible stuff. So actually, I haven't watched the video, so I'm actually going to go and watch that after we jump off the call. But fascinating stuff there, mate. So there is probably the big topic in front of everyone is basically, we're back in lockdown. Here we are. The Delta variant, we've heard a lot about it. Meanwhile, we still have the fears of inflation. Unvaccinated people. I think you mentioned in the show notes here that Singapore's gone back to tighten its restrictions because they did let everyone out, and I know that because Lachlan, who is a contractor for the Rask Media site, was having a beer the other day when we were chatting, and at the pub in Singapore, and I'm guessing he's not there right now. So I don't know. I'm. It's just, there's a lot to take in right now. How do you make sense of it? How do you make sense of going back into lockdown? So a lot of political argy-bargy around this as well.
Yeah, so we're not a political podcast, so we didn't go into the politics of this. But I mean, I think what is, I guess, I think the market fears, right? So the market, like Dow, for example, and that we can talk about this another day. Dow tumbled by X number of points, but only a few percentage points, maybe a couple of percentage points. But the Dow tumble was also partly related to on one hand inflation fears, and the other hand sort of Delta variant and the potential for Delta variant to actually cause further lockdowns, right? So what I think everyone is watching is what's going to happen in the so-called Freedom Day in the UK, where masks and everything is going to come off. It sounds a little bit it's being billed as the Freedom Day, where everything's going to be open and you can just they feel confident that they've vaccinated enough number of people, and there's just concerns about that. But again, what I think is ironic is the Freedom Day is launching at almost at the same time. Actually, there has been some further restrictions for French folks to get to travel into UK, because there's some other variant apparently in France. There's not the Delta. I don't know. I've now lost count of the Alpha, Beta, Gamma variants that are going around. But apparently there's a Lambda variant that is now taking hold in I think it's Lambda in France, and then so the British people are, for example, worried about this particular variant. So it's a little bit of a situation. I read I think the Canadian news actually is pretty interesting. Canada is now probably the most vaccinated country
really?
in the world. Yeah, I think they're slightly ahead maybe of Israel. And they have announced their plans of what they are doing, which sounds really reasonable. So I think in August, they're opening their borders with the US. And then in September, they're basically opening their borders to the world. And the only thing that you need proof of vaccination with the vaccine that has been approved in Canada. So which basically means Pfizer, Moderna, AstraZeneca, Johnson & Johnson. And for those vaccines, then you can basically come in and it's, if you're vaccinated, you can travel and you can travel out. CDC's, I was looking at the CDC's guidelines in the US. So in the US, the Delta variant fear in the US is different. There are pockets in the US which are severely under-vaccinated, and therefore there could be localized flare-up, and then you don't know what localized flare-ups do. So that's that fear. But the CDC guideline in the US too is that basically if you're vaccinated, then actually their thing is don't test, go wherever you want to go. Of course, if you have to go somewhere who want you to test, then you test. But there's a little bit of all those things that's going on. Singapore, again, is trying to vaccinate quickly, but they're, further behind in terms of the total sort of vaccinations. So they had to tighten restrictions, which is sort of what our situation is. Our vaccination rates are, around 12% fully vaccinated, which is pretty low, which is why we are sort of in lockdown across, I guess, 3 major cities. And until that changes, at least about 60-70%, I would think, is probably in some number. That's my guess. I don't know. I'm not an epidemiologist, and I don't have to make these decisions, which is really a fortunate position to be. I feel really bad for those people who have to make these decisions because these are tough decisions to make. But yeah, so I think the situation with Delta variant. But I guess there'll be more. We would know more as these particular countries which have vaccinated with a reasonably high percentage. So Canada is, I think, expecting to get to 70-75% fully vaccinated. And part of the game there is to vaccinate 12 and above. Right, okay. That gives you larger coverage of the population, right? So you get 12 and above, and if you're under 12, there's no vaccine yet, but maybe there will be a vaccine for the under 12s. But apparently, under 12s don't need it. Well, that's what they say, whoever they are. But I think so. I think that's the key. You would get to see whether the Canadians and the UK folks and the Americans. The Americans seem to be. I actually quite like what is happening right now in Canada. I like that approach where while they're vaccinating at a furious pace, there's a lot of vaccines apparently. They're basically like inviting people to take the shot. Please take the shot. They have not yet gone mask free, I think, which is really smart. Putting on a mask might be an inconvenience, but it's a small inconvenience to have versus lockdowns and all these other things, right? So I don't know what their plan is, and I haven't actually looked at the fine print. Their plan is post this date, August and September, that they've got, whether masks are required or not. But it looks like there might be some guidance around masks in indoor places and things like that, at least until they have more surveillance data.
It's interesting. I'm just looking at our wordandData.org, and they've got Canada as number one. The share of people that are fully vaccinated sits just above 50% at the time of recording, and over 70% for the first vaccination. Behind them is the UK at over 50% fully vaccinated and just under 70% partly vaccinated. And Australia is down at around about 12% fully vaccinated and just under 30 partly. But what's interesting, right, is you talk about the Freedom Day and you switch over to Bloomberg and you see that the UK is recording 40,000 new cases a day, which looks like the second high, like not the second highest day, but they're in the second peak, if you like, after that one a year ago. So, I don't know.
That might not be problematic though, right? So it depends on what. So the data from White House that I've read was suggested that 99.7% of the hospitalizations right now are among the unvaccinated. So I mean, counting cases, but if they're moderate to mild, then probably doesn't matter as much. Again, we don't know what the side effects are or this long COVID thing that people are talking about. But I think there's this danger of case count versus outcome count, right? And what really matters is the outcome count. So I think the focus at some point has to be on outcomes. If people are not dying, and people are not seriously ill that they need ventilation, hospitalization, and things like that, the US data thus far seems to suggest that basically those people who haven't gotten vaccinated are getting seriously ill. Those people who have got vaccinated are fine. Their risk, though, is that those people, they have a large population and, like what, 300 some million. And if you've got only 50% of that fully vaccinated, and that's part of the logic behind going after the 12 plus, is that you just increase the percentage of people that you've been able to vaccinate. And otherwise, you have this potential for, I guess, mutations happening because you've got this, large cohort of folks that can help mutate things. So, I mean, the hospitalization is relatively down compared to the previous peak in the UK. But the other problem, I think, with the UK one is UK has done what I call a bit of an experiment in some ways, right? Because they've given some people one shot of this and one shot of that. Actually, Canada. My dad got, who lives in Canada, he got one shot of Pfizer and one shot of Moderna. So his first shot was Pfizer and his second shot was Moderna. And in the UK, so the Canada has done that, and given people one Pfizer, one this, one AstraZeneca, one that. And the UK has done the same thing. I don't know whether there is some correlation here, but those data sets would come out over time as to whether there's some difference in efficacy because of this mix and match and so on. But
there's a huge fall off. So to your point, around hospitalizations for COVID, peaked at over, I think it was 3,800 in January this year, and even now with this second peak in cases, it's around about 600. So it's substantially down, even though their cases are going up. So yeah, makes a lot of sense.
Which means the vaccines basically are working.
Yeah. Okay then. So to shift gears away from the numbers to, has it impacted your investing at all? We just talked about Netflix, and one of the things with Netflix is that you can see if you plot quarter on quarter net global ads for subscribers, you can actually see that last year they added a lot. This year they haven't added nearly as much. So did they bring forward a lot of that demand last year? And will this, if there is a tail of cases and lockdowns, lead to any kind of difference? Or is it going to be like better? Is now an opportunity to buy internet and e-commerce? Is it not? Like, do those things even matter to you? Or is it more like structural things? Like, you wouldn't buy Netflix because of COVID. You might buy it because of other reasons like gaming.
Yeah, so I think it's more, for me, it's more the latter, exactly as you said. So, you might want to own Netflix because you think that they're innovative and they're going to get into these other markets that have been underpenetrated, and they're getting into these other verticals that would expand their revenue opportunities. I mean, what I think some structural changes have happened, and that's like, I wasn't a very prolific online shopper because I kind of like, I like looking at stuff and shopping if I have buying. And I'm a very specific shopper. So the only online shopping I used to do is like, well, I bought my car online, and I bought, I buy my Apple goods online. But but a lot of the stuff I actually just, would actually look at it and then buy. I've just, I've just discovered the convenience of being completely online. It's really good. They actually drop stuff at your door and it comes to you. And if you don't like it, you can send it back, and it's really good. And, people like Amazon, they're like really cool. They, if they're delayed, they give you the refund. The stuff still arrives. Now you have like, you've got your money back and you've still got the stuff. It's a really different experience, right? So I think there'll be some structural changes. And I think the other structural changes, people would probably, this hybrid work environment is here to stay. That has some impact, right? I mean, it not just has an impact. It's not about just conferencing software, whether it's Zoom or whatever else, right? It's not just about that, but it's about technology and software that would be used. I think those are longer term tailwinds that are here to stay. I think digitization of workplaces, using modern tools, I think that's going to accelerate. E-commerce, I think, has got a decent lift. Of course, you're going to see fluctuations, right? I mean, everybody's buying online now, whether it's from Kohl's or from Kogan or whatever, or Amazon. Some of that is going to shift back to physical, but again, I think there's a good, I think, tailwind here. Same thing for Netflix. I mean, I think Netflix, actually, this analysts also need to think about. Netflix has, now that we have a lot of choices, there's this behavior about canceling things and coming back, and that is related to content production schedule, right? So people actually come back to Netflix because, Stranger Things season 4 is now here, and that is going to actually drive net ads. And then one of the problems of the pandemic has been the shooting of movies was not happening, right? I mean, there was
exactly.
So there's a backlog in terms of content production that has to happen. But when that content hits, there's going to be people who are going to come back who might have churned out, who are going to come back. So, but again, that's something to consider. But the other thing to consider is, when it's going to be true for different streaming platforms, the other thing to consider would be that they've got 200 million people out of 7 billion people on Earth. Let's say you divide it by 4, that's the number of households that or 5 or whatever, 1 point whatever billion you can think is the potential market in terms of number of subscriptions they could sell. So that it's going to be harder. It's going to be harder ask, and they're doing these things about mobile and so on in different places, whether it's Indonesia or India or in Latin America, where they have different plans that they're selling. So I think you have to think about that as well. But I really think, I mean, most of the big gains, like the huge multi-bagger gains, have happened, right? Those come from that riding that S curve. But Netflix is still a large company that is still probably growing top line at 20-25%, and it probably can do that for maybe another decade, right?
Yeah.
And if it can do that for another decade, well, if you buy it at the right price, that's a nice blue chip type holding to have in your portfolio. So that's the way to think about Netflix. I personally don't hold it, at least not now. But yeah.
Me neither. But okay, so coming towards the end of the show, we'll drop some ideas. One thing on that I've been looking at is the amount of people that I speak to who are taking off as soon as the world is majority vaccinated, and they're going overseas or they're going on a holiday, is basically everyone. And so that's something that, this is not necessarily talking about lockdowns, the recurrence of lockdowns, but maybe the removal of them in, say, 12 months. Like from 12 months from today, the vaccination rates, it's hard to see us going into too many lockdowns, in my opinion, just as a general kind of broad stroke. And if that is the case, I think more people will be open to the ideas of travel. You'll be looking at things like Booking Holdings, which is the US owner of Priceline. Even here in Australia, What If, businesses that can do that and facilitate that transaction in a scalable way could bounce back pretty quick, I think. I'm not saying that's like not a forecast. It's just an interesting thing to keep in mind. I think if you're looking at what worked in the pandemic, was these companies bringing forward a lot of ads. So whether that was Netflix, whether it was Disney, any of these companies, Microsoft, Google, what's the next iteration of that? I think it might be actually return to, air quotes, normal. I will throw one idea out, and this is a company that I promised at the top of the show that I would mention, which is a company called AVA Risk Group. So that's AVA Risk Group. It's on the ASX under the ticker code AVA. Small cap company. I'll just get the market cap up. It is around about $100 million as we record this. So we interviewed CEO Rob Broomfield for our Rockets program, for our Beyond program. It's a company that was between our 10 and 20. So what I mean by 10, our top 10 obviously are our top 10. And then the companies that fall in between 10 and 20, we also release as bonus reports with the CEO interviews that we did with them. And so what does it do? AVA Risk Group basically has 3 divisions. It's got a business called Future Fiber Technologies, or FFT, which, if you think about an airport that might have a fiber optic cable going around it, and when someone grabs on the fence to try and get on the runway, it sends a vibration through the fiber optic cable, and that pings back and sends a signal to the security team. It's also used on things like undersea pipes, all these different things, like even just monitoring of conveyor belts, which is the exciting part of the business. Second business is BTQ Solutions, which is all about access control. So this is sold through distributors and through big international businesses. But basically, think about like biometric scanners. If you've got a server room that you need secured to only IT personnel, how do they get in? How are the doors encrypted? Whatever. Finally, they have a division called Services. And Services is a business that is a logistics business, but it's not like a normal logistics business. So imagine you're taking gold from here to there, from a vault to another vault, and it needs an armored vehicle on the way. They don't actually do it. They actually outsource the physical nature, and they have contractors. They just effectively book them and make money from that. So they have wider margins. I guess this is a business that sounds exciting. Probably the most exciting part of it, we think, is actually within the FFT business, the Future Fiber Technologies. They're actually going to use, and they already have started with this. They've got some programs and projects already underway, which is where they effectively use the cable, the fiber optic cable, to adjust and adapt to a conveyor belt on a mining site. And these conveyor belts, I don't know if you know this, but can be 10 kilometers long. There's not small conveyor belts. So if they go down for 1 minute or 1 hour or 1 day, it's huge cost involved in unraveling that conveyor belt, putting a new one on, finding a new one, repairing it, whatever. So this is all about them being able to sense if there's like a roller or a pin that's out of place or whatever. It's a really exciting business in that regard. So why didn't it make the cut? I'll give you two things. One is that we couldn't reliably predict the future. So one of the things is that we know we're not going to be specifically correct. We try to be generally right. The business itself is quite lumpy because it tends to get contracts and win tenders that can come in and then it can look profitable. Then the next half it's not doing too well. What happens, I find, when, I don't know, you have butted up against this a few times, mate, which is when you analyze a business that is focused on government tenders and security and defense, they can't give you details over what they're working on. And you can't even get customer testimonials because they can't talk to you either. So it's very hard to get that see-through as an analyst or as an investor. So we couldn't really forecast that. And we like businesses that we can forecast. The business has high margins in one of its segments. But I guess the cohesion between the segments is our other uncertainty. It's not necessarily a concern. It's just, if you look at recent numbers, it looks like the services business, which does that logistics, is actually the business that has grown a bit, where we want to see the other business growing, which is the high margin business, stickier business. And it's kind of been the other way around. So this is a company called AVA Global. It's on the ASX, AVA. We've written about it on Rask Media. It's a business, it's probably deserving of a spot on a watch list. At least it's on mine. It's not one that I own. It's a fascinating business. Worth, if any of our listeners want to reach out on Twitter and say, I've done a bit of work on it, here's what I think, by all means. I'm just looking for clarity around the actual outlook and the pipeline. So that's my kind of pitch at the end of the show. Anirban, do you have anything for us? Or do you know AVA Risk Group?
No, actually, no. I thought it was fascinating, the overview, and I think you're spot on in terms of not being able to forecast. This is hard. Do they have a backlog that they give, or there's no backlog of contracts that they won that hasn't turned yet into revenue?
They give you, I guess it's more like qualitative feedback, so they don't necessarily quantify exactly how much is going to be this or whatever. They give you this much as we believe is recurring in nature, this much we don't. They have one big deal with the Indian Ministry of Defense, and they actually just licensed, this is the biggest deal they've ever done for the fiber technologies business, and they actually licensed that out. So a contractor in India actually implements the fiber, but they just effectively say, okay, so this is actually the way it works. When we talk to them, this is the way they're describing it is, so we've got the software panel. This is as in I'm AVA Risk Group. We've got the software panel. We've got the credentials to make the network work. Once the contractor installs them, they send us a message to say, can you please activate it? and in that way, AVA can get paid. So it's activated, or not until they're paid do they activate it, and then they move on to the next segment of the line. And so this is a business that's had a big contract, and they're looking to win more of these. But how do you know? My question is always, how do you know that another one of these is around the corner? It's pretty hard to know unless they tell you, like, we think this business is X size and we think we can capture this much. But, I'm used to zero and Apple.
Recurring revenue.
Intuit.
Some form of recurring revenue.
Yeah,
I think it's an interesting company. As you said, I think it is deserving of being on a watch list for further research if somebody's interesting. I think that's the right call. I like that. I was going to give you I'll give you a stock, a quick one. I'll make it short in the interest of time. So the stock I'm going to pitch is a company called Okta. The code is OKTA. If you are familiar with single sign-on, which basically you can, for example, use Google single sign-on or Apple single sign-on or Facebook single sign-on. Basically, you can use credentials at one place to sign on into multiple apps, websites, and things like that. That makes password management easy. Now, this seems like relatively easy problem, but in a corporate context, this is really hard because corporates have, and big enterprise might have thousands of apps that they're using internal and external. You want to have them managed using a corporate password management, identity management system, and that identity management system is provided by Okta. It manages, passwords. It manages the identity, makes sure that only those people who should have access to certain apps have those access. If somebody leaves, then their access is terminated. It can do, multi-factor authentication. It can, prompt you to, it seems like a relatively simple thing, but it's really, really important, especially in this sort of distributed global sort of way in which business is being done. And I think, this business, people always think, why should you use this versus, why not use Google? And, Google is a competitor. Maybe Microsoft is a competitor. But one of the things for enterprises is that they don't like using services from big tech if they can avoid it, especially for things that are critical, because big tech tends to, some of the big tech at least tends to look at things, how you're doing things, and therefore you might be hesitant to use their particular services. So Okta is the specialist, and I think it has a big tailwind in terms of an idea called zero trust, which is a framework for security, which basically says that you basically do not trust anyone, and we can talk about this another time. But in that, one of the pillars of that framework is to have an identity management solution that can essentially ensure that zero trust is satisfied, at least at the handshake level of ensuring that your access to applications, right? And there are other components of it. So I think that's a big tailwind for a company like Okta, especially in the face of all the hacks that are happening, the SolarWind attack and the attack on Microsoft Exchange and things like that. So I think in the context in the world, or we talk about these, we hear in AFR has these headlines about, that hack happened and this hack happened. And, the school websites were, for example, down not too long ago. A lot of the stuff that happens is compromise on machines, typically compromise on passwords, happens because of compromise on passwords. So, and compromise on identity. So I think this company still has a long runway. It's a relatively large company. I think it's probably about 35 odd, I'd say 35 odd billion
on the share
in
price
market
around
cap.
32 US billion.
There we go. So without even looking at it, pretty close, 32.
Yeah.
So I still think, it can still be a nice, decent multi-bagger. I do own the shares for this company.
So do I.
Yeah. Oh, great. Well, excellent.
Yeah. Hopefully misery doesn't love company. But so interesting here. Todd McKinnon, who's the CEO and co-founder, when I saw him interviewed, I thought, he looks like he's about 25. And then he was on, is it Mad Money? And is it with Jim Cramer? And he's and he goes, you're not many people know this, but you're about as old as me. And Jim's bald and looks like an older guy. And Todd, if you've seen the photo of Todd McKinnon, you'll know what I'm talking about. I own Okta shares, and I think that the deal with Ortho, which is a complementary business, pretty much developer focused. Ortho is any of our hardcore software engineers will know what I'm talking about. I thought that was a really good deal that expands the TAM and also pretty much consolidates Okta as the number one in independent zero trust. But what I find really fascinating about Okta is when you listen to the quarterly calls, just the clarity of the management team. I find it so refreshing to hear Todd and the team speak. And, as investors, and if you go through uni and you study finance or whatever, you're taught, you got to calculate the PE ratios. This is what the profit's going to be. At the end of the day, if you have someone like that running your company, it takes away a lot of those concerns that you can have. And he's done lots of interviews. He did one with Invest Like the Best about how he built the business. It's fascinating. And I think, beyond just single sign-on, people probably don't appreciate what that means. But basically, I think over 7,000 apps now integrate into Okta's workforce, so into Okta's platform. So if you think about that, it's basically the hub where you go to get everything.
Exactly.
And that's pretty tremendous in terms of the ARPU, like the cross-sell, upsell potential of the business. We don't use it because our business is so small, but I can definitely see a time where we would, and a lot of businesses would be using it. So fascinating, Okta. Cool.
Okay, excellent. I did not know that you own the shares of this. Okay, I'm going to give you, we are exceeding time, but I'll give you this odd, I call it the Silicon Valley tree. Okay, so this is the Silicon Valley tree. So you would observe a lot of the excellent second generation sort of SaaS companies, second generation as in Okta's generation, are from people who worked at held high-level positions at Salesforce. Yeah. So Todd was, I think, leader of engineering or something like that in Salesforce. VP Eng at Salesforce. And so Mark Benioff has the unique credentials of actually spinning off a lot of these people. Many a times what Salesforce Ventures have done, which is they have a venture arm, they would actually fund these companies, which I think is a really great culture. The other thing that people wouldn't know is that Salesforce has an app store, or it's not called the app. Yeah. It's the marketplace or the app, whatever. Something it's called. Is it called a marketplace, or is it called the or app exchange? I think it's called the Salesforce app. I think it's called the app exchange or marketplace. Anyways, again, the specifics are probably not that important. But so Benioff, I think, looked up to Steve Jobs as as one of those leaders that you look up to, like many people do. I think Benioff has worked at Apple. So Benioff was actually had the luxury of seeing the iPhone before the iPhone was released. Like, in a true Steve Jobs fashion, he would show it to his favorite people. Here's what I'm working on. This, I think, is really cool. This is going to change the world. And he told Benioff that, hey, I'm going to do this thing called the App Store. And Benioff looked at him and said, well, but how are you going to do the App Store? That's a trademark that Salesforce owns. And you know why Salesforce owns the trademark? It is because when Benioff was starting Salesforce, Steve Jobs told him, you should build this app store for all these apps on the web. So it was an idea from Jobs to Benioff. So Benioff said, okay, this was your idea. We can live with a different name. So we're going to give this as a gift from Salesforce to Apple for you to have it for the iPhone. I think it's just pretty powerful.
Exchange,
yeah. So I think it's pretty powerful. I think this idea of an ecosystem and of an ecosystem of players that inspire each other, right? So Jobs inspiring, Benioff inspiring all these other people. And you're not really jealous of these people because they're all successful. It's like seeing your own children coming and doing great things, and even maybe they're competing with you. And it's fantastic. I think I really like that. And so that's one of my. When I'm looking for a company, sometimes I actually look for these trees, and I find this tree is very interesting. If you can find an interesting tree, it sort of talks to that culture. Anyways, that was an aside.
I love it. Yeah, I own shares in Salesforce as well. So full disclosure there. Yeah, it's fascinating. And yeah, there are quite a few people that have come out of Salesforce and done a lot of things. So maybe we can spend a whole episode on that in the future. But mate, we're at 56 minutes. We said we'd keep it below 40, so we've done well. No, well, it's always good to end with some companies as well. So we talked about AVA Risk Group, we talked about Altium, we talked about Netflix. Air quotes, missing expectations. Bezos going to space, the Delta variant and what that means, and how maybe we can play that. Talked about Okta and ended with Salesforce. So great, mate. As always, it's a pleasure. If people want to find out more about you and if they want to access that payments, the digital payments report, and also just join 7 Investing, how would they do that?
Oh, they can just go to 7investing.com/subscribe, or they can follow the show notes below and get $10 off using
10
the Rask.
buckaroos off.
10 buckaroos off using the Rask promo code. And as Owen would say, that Rask actually makes no money off it. So, Owen does it because he likes to, and we thank him for that.
Yeah, it's great. Well, I wouldn't be doing it if I didn't think it was an awesome service. So I'm just appreciative you get to spend some time with me each week to share these insights. So, mate, always appreciated. And we look forward to hearing from everyone else on Twitter. If you've got some thoughts for us next week, give us some links to pop into our spreadsheet so we can talk about them. We put these in this morning. I should say I didn't put them in. The other half did. Always a pleasure, mate. Thanks for chatting.
Thanks for the chat.